Thank you for joining me. I'm Alex, and I'd like to talk about Microsoft today. As I've said before, I would love to buy Amazon Web Services without buying the rest of Amazon, and Microsoft is kind of sort of the closest thing to that. So, what Microsoft does is they make the Windows operating system, they make Microsoft Office, they build the Microsoft Surface tablets, which is not really a huge moneymaker for them. And they're very active in the cloud. So they are the main competitor to Amazon Web Services. And the third main competitor would be Google, whatever the hell they call themselves. So Google has a cloud product, also very big. Microsoft has an enormous cloud product. And then there's Amazon Web Services on a different level, way above them. But Microsoft is going into the right direction with being a cloud provider, which means that they have the server farms, they have the software for that, they have a lot of things that you need to basically host your app on, their servers. So the price is $137, down 0.33%. It was Labor Day, so the markets did not move at all, surprisingly. Markets weren't open, so we still have Friday's numbers up there. PE is 27, which is fairly high, but I think pretty much justified by their performance over the past few years. Dividend yield 1.3% is not great. Payout ratio 35% is pretty decent. Obviously, you can't expect a great dividend from a stock that has a PE of 27. So 1.3% is fairly low, and if I were to be a dividend investor, I probably wouldn't buy it, even though the payout ratio is great, and the growth is pretty decent. So revenue $126 billion, which is up 15% year over year. They have been consistently growing. They have been growing for a pretty high amount over the past few years. So their transition from basically just doing Microsoft Windows and Office and other things to being a cloud provider has been fairly successful, and we're finally seeing kind of the result of that. Everyone was upset that they're giving away Windows 10 for free for people who had basically any Windows in the past. I'm not sure if that is even still applicable, but despite that, obviously many Microsoft Windows licenses are being sold with new PCs. So if you buy a laptop from Dell, for example, they have to buy a license from Microsoft, and they're still selling a lot of licenses, even though they're giving Windows away for free for people who already have a computer with the Windows operating system. So I don't think their Windows numbers are ever going to go towards zero. And obviously, even Office in government environments, in big companies, and even tiny companies, it's all usually Microsoft Office. So despite having competitors there, despite having free competitors there, they're still selling at fairly good numbers. So earnings are up over 100%. I would attribute that mostly to the tax cuts. I don't expect the kind of earnings growth long term. If I did, I would definitely buy the stock right now for all the money I had. Anyway, we'll see how the earnings grow year over year. I don't think that they're going to make significantly less money at any point, because their product lineup is pretty strong, and with a lot of movement towards the cloud, their cloud products being one of the biggest, I think that both revenue and earnings are going to continue to grow. Maybe not at the current levels, but I think that it's going to be solid for a very long time. So Balance sheet looks pretty amazing. Net tangible assets, $52 billion, up 30%. I don't really, even though I constantly list those numbers, I don't really give too much credit to the total assets and total liabilities numbers. There are other things in the balance sheet that are more important but less comparable to other companies. So I list these numbers because they're comparable to other companies, not because they're reliable numbers. I would more look at short-term investments, cash equivalents, and all those kind of things. But balance sheet, despite that, looks pretty amazing. Obviously, net tangible assets of $52 billion, which is over 10%. Nope, over 5% of their market cap. So, to sum that all up, I think that for a value investor, the PE might be slightly high. I think for a dividend investor, the dividend is very low. And I think for a growth investor, the revenue growth is pretty low. I don't know how much stock you can put into the earnings growth because other factors played a much bigger part than their actual performance. But with that said, if you have a balanced value investing strategy that looks at long-term outlook, including current valuation, growth, and the balance sheet, I think that Microsoft is reasonably priced. I'm not going to say it's the best stock out there, but I think it's a reasonable price, and I think that if you're looking for diversification into tech stocks, I think it's a great candidate. Because of the balance sheet, because they've been around a long time and know what they're doing, and because their valuation is actually reasonable. It's not like an Amazon that has a PE of 80. It's not like an Uber that has never made a profit. So I think that it's actually a pretty good stock to invest in if you have a very long-term outlook. So we're talking 3 to 5 years at the very least. I think it's a very good stock. I don't think I'll be investing in it because the PE is fairly high, the dividend is fairly low, and I already have a reasonable amount of tech stocks in my portfolio, with Tesla being the main one that's very speculative. So I'll definitely be considering it, and I'll definitely keep an eye on it. But I think that for pretty much everyone out there, it's going to be a reasonable investment. It's going to be a very safe investment. So that's it for today. If you haven't subscribed already, make sure to do so if you like this video. I'm coming out with more videos every day before market open. I hope you have a successful day.